The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exceptional edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, where there's no bear side, no bull side, just the right side, and that right side is sitting on your hands. As we discussed over the last 2 days, I suspect we're stuck in this 2140 to 2150 area. I went through all the various reasons in the newsletter this morning. They were rather simple, though, and that is that we've got the fields kind of marked off. They've got the little chalk marks out there at the line of scrimmage in the 10-yard to get a first down, and no one wants to either go back behind that first one or past the second. Volume is 1.88 billion shares. And back to the doldrums. We talked about some of this in August, but it's going to take a little bit of juice to get us going. That juice will probably not happen until about 3:15 tomorrow, unless they say something really big, which I do not think they will. But the more I look back, I played the clip a couple of times. I'll play it again today. But it's Mr. Arian, former of PIMCO. It's actually PIMCO. But they were on CNBC so much, I thought they were pimping it. So I thought, let's just call it PIMCO anymore. But what do we have? The market doesn't want to go up too far because as soon as that happens, the Fed sends its minions out to throw cold water on it. As soon as it starts to go down, they throw Molotov cocktails on it to get the fire started again. But they like this market that just goes sideways. If it started down, they think it could crash. If it goes higher, it can make a atomic bomb that blows up circa 1929. They are hoping that they can just get this market to go sideways for the next 5 years, and maybe it'll catch up to its evaluations. In the meantime, we always like to meet here, just me and my friends, at 2 to 3.
The following takes place between 2 p.m. and 3 p.m.
2144 on the S&P cash. We're up 5 points. Like I said, volume's not all that exciting. I don't have any cash of any kind in the markets at the moment. I'm going to sit back and wait and see. I just don't like, trying to buy things at extreme valuations. I need to either wait for these things to catch up with the valuations and or pull back so I can buy them lower. More likely, if they go up a little higher, I would be in the mood to be a shorten. So what do we have else going on here? Well, we got a few things to discuss, a few earnings that we talked about over the last few days. But let's get this party started with a little history. Most people don't know that the word story is in history.
That it's all just a little bit of history repeating.
It is history repeating. If you don't know your history, you're doomed to repeat it. On this day in 2000, juvenile Utes, I'll call them Utes, spread to online investing as the U.S. Securities and Exchange Commission brings a case of securities fraud against a minor. For the first time in its 66-year history, the SEC alleges that on at least 11 occasions, Jonathan Ledbed manipulated microcap stocks by posting hundreds of false and misleading statements at online message boards. Ledbed, who'd racked up nearly $800,000 in illegal gains, was just 14 years at the time. Don't you feel like maybe you're kind of shirking your duty? If you're going to be a criminal, man, you got to start early, and he has. I wonder what kind of life this guy has led. I'd like to catch up with him. Well, maybe I'll do that. Maybe I'll make that mission to find out what he did with his life. But my guess is he may have had problems getting in the stock market as a legitimate player. He may, I wonder what they did for him. 14 years old. Didn't it all just go away when he became 18? It's interesting. Anyway, but one of the reasons not to play microcap stocks already. Don't everybody know that for the most part, they are just beanie babies waiting to be manipulated, he said. Other things going on after the bell tonight, we've got Adobe and KBH Homes. And why don't we go to the charts already? The XHB, of course, we had earnings out this morning from Lennar. It's down a couple of bucks. Why don't we look at that one first? Do I have it? Yeah. Let's take a look at that one first and see what we got out here. Well, this is certainly back down. It's got higher volume. It's come back into the trading range, but certainly some decent volume out here today. You wanted to see something less than 2.8 million shares that you saw on June 27th. We already have 8.4 million shares. My guess is that earnings after tonight will probably tell us a lot more about it. We kind of had a nice little Gartley pattern if this thing would have gone the other way, but not to be. And one of the reasons why I do not play these going into earnings, I just do not know. Let's take a look at the XHB real quick. Not hurt as bad as you would think with Lennar, but volume is picking up a little bit. Again, with more earnings in housing the last couple of days, we will continue to keep an eye on those. Did I have it? One of the other ones we were talking about yesterday was Beacon Roofing Supply. I wanted to see how this one adapted. It doesn't have a lot of volume, but it does look like it could close below its previous low on May 17th, and it might start giving us some kind of signal out here as to what's going on. Fairly light volume, though, out here. My guess is that if KBH has good numbers, let's take a quick look at that. KBH. Maybe it's got some people shorting it already. If it has some good numbers, maybe you can get something going. If not, KBH headed back down to the $12.38 low, and probably going to see volume in the roofing company and some others. So we'll keep an eye on what's going on out here in that. Other stocks of interest. If you thought the Blackfish was done with SeaWorld, not so much. Higher volume, lower low out here from the September 12th low that had 2.5 million shares, $11.92. What else you can say? Higher volume. It is back in the trading range, though, which is interesting for all this volume. At some point, I think you got to think that SeaWorld's worth something. I don't know. I guess they're phasing out the Blackfish. But kind of interesting to see what a hit piece can do for you and to you as a company. Once the meme becomes the truth, I don't know how truthful it was, but I don't know. We shall see. In SeaWorld, after this short, very short, extremely short timeout.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
That's right. You can communicate with me at 877-927-6648. You can also email me at path@tfnn.com or post a message in the den. Sometimes I'll catch up on the breaks on the emails and in the den. But we shall persevere as we're looking at other stocks out here. Very interesting to see SeaWorld kind of pop back into the trading range with a lot of volume today. We will keep an eye on that one in the near future. Royal Caribbean. Kind of a surprise earnings out here. It's up $2, not the biggest deal in the world. But I have to say that it would have been kind of tough to see being short this going into earnings. June 28th, he had 6.2 million shares at $64.95. Didn't quite get there, but only got 3.3 million shares on September 12th. Kind of came back in there yesterday with this 2.3 million shares. Probably wouldn't have bought it, but certainly wouldn't have been short with a light volume going in to that previous June 28th low. I thought the Zika thing probably would have gone a little bit farther, but kind of interesting news in that at least in Florida, they've been spraying so heavily over in Miami that I'm surprised even humans are alive, but apparently they've killed every mosquito within 100 miles trying to make sure that no one doesn't think about coming down there for the winter. But I don't know about the Caribbean in itself and whether or not we're going to still have issues with that, especially with newlyweds thinking maybe about getting pregnant and having a kid that isn't quite right because of the Mr. Zika. But nice volume today in Royal Caribbean. We'll look at others. CCL, not much movement in that one today. I think they've got earnings coming out here also. So we will take a look. Or maybe that was earnings the other time. I had something coming up on them, but I didn't take a look. What else did we have? Let's see. And one stock that most people have never, ever heard of. But guess what? This thing is, I think if I typed it right, TRBA. I wonder if I even have it. Nope, it's not even on the list. I don't know if it's an over-the-counter stock or what, but TBRA, up 33 bucks today. Its price $38. Yes, up a whopping 706% today. It's some kind of biotech that someone bought out today. But man, someone was wrong on the price on that, weren't they? $5 to 38 bucks. Quite the move out here. I'll have to find out more about that one. Pretty rare to see that, but God help you if you were short. That is got to be the stock move of the year. I wanted to check back in with others. We talked on Friday about seeing Wynn, as I said, kind of look like very lofty moves in this. And I wasn't that hyped up about China as many other people were. Part of this, I think, was running a great deal of shorts going into Friday's options expiration. And, of course, yesterday, fairly extensive move down with 4.3 million shares. Not a lot of follow-through out here today. You're starting to now go into this up candle from the 12th of September. So maybe you got a little bit of support down here around 100, but 109 bucks looked awful lofty. I think I had an update last week in the newsletter, and I didn't know if we were going to roll over instantly, but it certainly looked the kind of action where you get $2 up and down moves in 15, 20 minutes. Normally is a fairly good sign that there's a little bit of fluff, a little bit of soapy suds up at the highs, and probably a little bit more than what you wanted. But as a lot of these are to do, they come back into these gaps. Even the minor gaps now seem to be tested, and that's exactly what Wynn did, and is now rolling back into the trading range. You know, is it an ugly-looking chart? The answer is no. I really dislike, though, that China is getting back into the game of blowing the balloon back up in its real estate, and don't believe that a incredibly small tick up in how people are coming to the casinos of China really changes much of anything. I think everybody saw that tick, all believes that everybody's going to run back to the casinos. I just don't buy. It may be a bottom, but we're a long ways from the bottom out here. You've got a high volume low back down at $49.95, and that has been untested. That makes me think that this may be one of the bigger trading ranges in a stock. You go all the way back to January 14th, where it did pierce the October 1st, 2015 low. It went below it. It did so on just slightly higher volume. But that means that eventually you're going to come back and test that generally within 6 months. My guess is that as soon as the wheels fall off the wagon, that we will be taking a look at again on that one. Some other stocks that kind of had my interest out here. We'll talk about the oil patch. Has been just how weak with with light volume, let me put it that way, that some of these energy sector stocks have been performing. We talked about the giant amount of supply that's coming on starting next month in the North Sea, or it's not the North Sea, it's the Caspian Sea, excuse me. And that really, I don't think a lot of people have factored that in. And I read a few more articles last night. That does look like that's going to be a thing for a while and could be huge within a year and a half. So it's very tough to see exactly what everybody thinks that crude is going back up. You know, maybe we're in this 35 to 50 range for a while. But now we've got all these wells ready to turn on at any time. I suspect that the trading range is a lot lower than higher. And as soon as a few other people coming along, the only other thing I can think of in crude right now that adds some level of support is the fact that all the people in Venezuela are eating out of a dumpster. Not because they don't have any cash coming in. They do continue to sell big amounts of crude, but they set their sails on the big socialist agenda. And for what, the 2000th time in recorded history, back 6,000 years, we see socialism fail once again. But yeah, so what was the article that I saw? One out of every 5 people are eating out of dumpsters now. They ran the leader out down the streets over the weekend. I saw that too. So maybe, if anything, maybe you get a little turbulence in Venezuela. Maybe that solves or ends the that part. Man, if you could get anybody in there that knew what was going on, I imagine they could really turn the spigots on and maybe even have a little food to eat. Thank God I'm an American. We'll see you on the other side of the break.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, Wells Fargo was the CEO was out today, and I think the character in the end of Braveheart out there at the end of the movie probably thought he had it off just a little bit better than the CEO today. Last week I said it's our new theme song for congressional reports out there is the whipping post. We didn't get the right version of it, maybe the live version, but here's the one I love, the Allman Brothers version from 1969.
I'm dying.
Well, he probably thought he did. I tell you what, it's rare when they get as many good shots in there. There was one to the body, one to the face. They were making him pay. And I don't think it's over out there for Wells Fargo. Strangely enough, I was eating lunch, and a Wells Fargo executive who had some shirt on with Wells Fargo on it was sitting next door, and we were all in the bar area of Chili's, and of course it was on. And I was kind of laughing my rear end off because, of course, his boss was getting grilled while I was waiting for my thing to be grilled for lunch. But it was interesting. Very interesting that this thing popped up today. I don't know really. Got some high volume and coming back down. Maybe it's just that it's too short. Everybody is expecting this to go lower. This September 19th low with 60 million shares had a lot of short interest in it. My guess is you're going to get kind of a bounce. If the market is headed down, the real place to pull the trigger on this again would be in that 48 area, where it did gap down on 59 million shares on the 13th of this month. So just a little bit of patience out here. I think we've got some stocks that are setting up. On the front of stocks that just will not stop going up, NVIDIA looking a little bit weak out here, spiked with 10 million shares yesterday. The August 15th high, 35 million shares. It went through that $63.50 high, closed back below it, and kind of rolling back on light volume out here today. Still will need a little bit more for me to pull the trigger, but you've got a fairly decent setup out here. What you don't want this thing to do right now is either close below the 9-day moving average or the 3x3 displaced moving average. Either one of these could be a trigger to pull the trigger if you're thinking about shorting this stock. It's still going to be one of the stronger ones out here. Had decent volume as it approached the high of 12.8 million shares on the 15th. Man, a lot of these stocks have some very decent amounts of money in them. You might get a very fast trigger. This thing has been going up since the February 12th low. You can even make a case that it's been going up longer than that. This was one that I missed the whole idea of why this thing was going higher. Around that $20 level, it looked very poor. And this slowly started getting better and better. And it was for the reason that people were buying video cards, not to do video, but to compress video and do other things other than just use them for high-powered game machines. A huge move up here, but let's just take a quick look. If you look at this last move out here as a retracement, we'll get back into this. You wouldn't have a problem with this thing coming back to $45 and still being a bullish chart for NVIDIA over the long time. But just a 50% retracement of the last major move off that $24.75 move. So there may be some significant downside if these guys miss anything. Let's take a look when their next earnings date comes out, because they are one of the leaders out here. November 3rd. So what do we got? 5 weeks? 5.5 weeks for earnings. And this thing may hold up through that. I'm not, like I said, I'd have to see something that really gave a decent signal to pull the trigger. But just know if you're trying to buy this thing up here, your risk is probably down to that $45 level. And you got a big kind of mushy layer from about $46 to $40 where this thing would come back in. And then if it got real bad, you've got a gap down there about $37. So buying high, trying to sell just a little higher looks problematic for that stock. What else do we have going on here? The OHI. Let's turn off a few of these things here and clean this chart up just a little bit. There we go. The OIH is kind of interesting. We have come back to this gap up that kind of started this higher trading range to the gaps above it. So again, gaps to the upside, gaps to the downside are defining a great deal of what's going on in the OIH. You got a pretty good level here that you hit today with 4.5 million shares. And that was, 5 million shares yesterday, 3 million today. That's going back into the 6 million share low of May 19th and the gap up volume of 4.4 million shares. So it didn't blow it out. But if you were actually thinking of going bullish in crude, one of the signals I'd be looking at here is about $25.70 to set this up as a low that could at least possibly start showing some level of a low out here. Some of these other ones, at least you're starting to see some lighter volume as they break the low. Another one in this whole space is Oceaneering International, OII. Energy on this one has finally started to bleed off just a little from that June 8th high back down to this test of the February 12th low. 3.9 million shares on that February 12th low at 25.33. We've been kind of nickel and diming through it. But the volume has, we had, 3 million shares as the highest volume in these last few days as we've kind of nickeled and dimed it. To get long this thing, you'd need to see it close back above 25.33. But there are a few things out there that may act like that is an issue. Other stocks in the same vein are Tidewater. We talked about that one a little bit, but it just continues to bleed lower, which means that we might continue to see something. What's the other one? Rig. Another one, they're all down here at the previous lows. You got fairly light volume in rig out here today, 13.5 million shares. Now that goes back into this 53 million share April 7th low. The energy was just a tiny bit lighter on the way down, so I'm not expecting some kind of giant move off these lows. I'd really like to see, if you were thinking bullish, really like to see rig test the February 24th low at $7.67. That's 21 million shares, but 53 million shares is going to take a while to burn through, I think, that April 7th low. We will be back quicker than you know.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And it's hurry up and wait time. If you've ever been in the military, you know that very well. 2145 on the S&P. Cash volume comes in at just over 2 billion shares right now. So not a lot happening out here after the bell tonight. We do have Adobe. I don't see a great deal in this one other than the fact it did come out, break the May 31st high of 3.4 million shares back here on September 2nd with 1.7 million shares. Did pull back and back under that $100.56 high of that date. It's pulling up, got a little doji out here today. I do not like the light volume from June 27th up to this September 2nd high. That being said, it seems like there's not a lot of good bets to be made right now into earnings. They seem to be much more sensitive to the feelings of the CEOs and the CFO about what they want to put in earnings, and it's hard to actually define what that is. But after the bell tonight, tomorrow morning, we get another read on car sales with CarMax, KMX. This one, for some reason, seems to be doing a lot better than I think it should be doing. This energy off this last move up to September 7th from the June 27th low really had energy kind of coming off. We knew so on some of the numbers that came out. This thing did blow down on the 9th of September with some heavy juice. It's still trapped in that area. Again, I'm not going to be pulling the trigger on any of these things going into earnings, but if there is one that looks weak, CarMax certainly looks like that. We talked about last week about many of the subprime people bailing out of that business. It wasn't anything like it was in 2007. But they are already bringing down, I think it was 8 years to 7 years, which is still obnoxious enough on a car loan, but moving it down to 7. And there's some discussion that they will be bringing the loans back down to 6 years, which is probably, for the price of the car, probably much more appropriate these days. So we'll keep an eye on that. Other stocks of interest on Wednesday, we're going to look at Best Buy, or not Best Buy, Bed Bath and Below, and that's all this thing has done for a while. You had a high volume low with huge shorting on June 23rd. Pretty good indication that was the exhaustion move. Went up to 46.81, and it now is kind of moving back down to this level. You've got some fairly good support at $1. Christmas is coming up. Energy off the high out here, not too low, so I probably wouldn't be pulling the trigger short on this. But nothing's really turned out any better that I can see in that business. It's not like a whole lot changed. Jabil Circuits also tomorrow, JBL. And of course, this is going to be after a raucous Fed meeting. So we'll think about this. Now, Jabil did pop up a little bit today. It gave almost all that back. It's going through its March 7th high of 2016, $22 at 3 million shares, where it busted it yesterday with 3.7 million shares. So a little bit of decent volume as this has gone through the previous one. As many of these stocks do, to me, the bet would be looking at this back in the mid 25 levels, where this gap down started on the 9th of December of last year. And I don't see anything else, but that would probably be the place to take a look at a short if volume starts dribbling out. Another company, Red Hat, HRT. I think this one got smacked at last earnings, pretty horribly. Back here on June 27th, this thing, the wheels fell off, $11 in a couple of days. Been coming back into these gap downs that have high energy. This could be setting up a nice move down. Just whether or not these models are ever going to work, that is, giving the software away and charging for the service, can work. I'm just wondering about how well it will work over the length and lifetime of the product. They've done much better than a lot of people have thought, but at the same time, seems as the more and more you put everything together in the cloud, the less and less you're going to need a company like Red Hat. If you're Amazon, you can pretty much do everything that they do in-house and not support the entire ecosystem of Linux. But this is getting awful close to where you would want to pull the trigger. I'm thinking 77, 78 on light volume on a couple more days, maybe a spike on no volume tomorrow would make this one extremely interesting to me on the short side. We're up 5 points in the S&P. Cash 2144, volume just 2.1 billion shares. So volume going to probably really be light as we go into the FOMC meeting tomorrow. And we'll play the FOMC theme song before the end of the day here. But I don't know if you can make anything more about that. We also were looking about the heads up that we're going to get with a couple of companies that are in the office furniture business. Steelcase already tanking on volume today, but the volume is not more than the June 27th low that had 4.1 million shares, just 2 million shares so far, but it looks like someone said boo. Let's check the news, just make sure I'm not wrong on what's going on here. I'll move that over here. Let's see if we got anything else going on here or news. Profile, conversation, financials, optional, analyst, CDL summary here. Ooh, this is ugly. Didn't know this. Okay, it changed its date when it's going to be coming out, and that goes to the 22nd. Yeah, so it's not going to happen tomorrow. Maybe that's a lot of people didn't like that. Well, we can move on from that one right now. The other one that is still slated is Miller Herman. Take a look at that. MLHR. Wow, this one's getting the same love. There must be some more news that I'm missing in this office furniture department. Let's check this one out real quick. See if there's anything in this one that affected that one. Did they pre-announce? I'm seeing a whole bunch of headlines that saying ETFs with problems with Miller Herman. Oh, okay, here we go. Miller Herman announced a lawsuit settlement. ETF, more ETF exposure. This goes back a ways. There must be something going on out here I am unaware of on Miller Herman and Steelcase, but and both of them showed tomorrow. We shall return for the home stretch. A little bit of the FOMC talking too much. And that's it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yeah, we're back there. We had a little hiccup as we move along. What else do we have going on? Well, of course, it's all about hurrying up and waiting. And somebody posted in the den about waiting on Godot. If you've ever been forced to watch that play, I'll give you a hint. He never shows up. But, of course, we've got the Fed. They've kind of been talking too much. And, of course, we've got our new theme song for them.
You even worry my pet, you just don't
Well, she'll be talking after the announcement tomorrow at 2 when we start the show. Normally that runs from about 3 o'clock to 3:15, sometimes as long as 3:30. So sometime in that area, you will find out that, it's just going to be one of those things where you're going to have to play by ear. I am hoping that we see a bit more going on and a little higher and lighter prices, so I get yet another bite at the apple, so to speak. But, we've got a lot of these charts that just kind of look like maybe last engulfings, APL. I had an email asking me out here if I had any thoughts on Apple. They got a couple of small issues with the new iPhone. So far down on light volume. Apparently they make some kind of hissing sound, and everybody's all upset about that. Not exactly sure why. One, that you make a hissing sound, and two, why people would be upset. But might be because the little speaker is supposed to pump out water if you get it in the water. It's supposed to automatically pump it out. I wonder if that's just not working. But you got a little pullback today. Volume's not all that exciting. You did break the high out here in the chart of April 14th. But I don't know. I've been watching a lot of the individual stocks that are suppliers to Apple, and I'm wondering, why they aren't getting the kind of love that they probably should have if everybody is right on the number of units that Apple's going to be selling over the next 3-6 months. But keep a close eye on that. Let's take a quick look at Qualcomm before the end of the day. I got plenty of time to get that. It gapped up, had a lot of energy. They've got, if you're wondering how Apple's doing, Qualcomm has the majority of the parts in the new iPhone 7. It's been bouncing around the $60 level. You haven't come back and really tested this gap of the 21st of July. And I suspect that if you were thinking about going long, that would be it. You have to look coming back in at this 58, maybe 57.50 level. And that is a double gap, as we've talked about so many of these double gaps setting up for them to come back and at least get partially or halfway filled. This did gap down, Qualcomm did, on, what was that, the 5th of November last year. And, of course, this gap up 16.7 million shares. The gap down was on 65 million shares. So you have gone above that gap. It's got lighter volume. I think that gap's going to get tested. In the meantime, sell when you can, not when you have to. Be here or be square tomorrow for the FOMC.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.